Welcome back to the Global Ledger. I'm Justin. In the last few episodes, we've explored the deep plumbing of global liquidity. Eurodollars, FX swaps, collateral, dealer balance sheets, in the offshore dollar system. Today, we're bringing that all together to examine one of the most powerful and misunderstood forces in global finance. And that is the global dollar shortage. I call it the world's structural need for dollars that never goes away. This episode explains why the world depends on dollars, why dollar liabilities grow endlessly, it seems, why dollar liquidity doesn't, and why crises always become dollar crises. And also why the Federal Reserve unavoidably becomes the world central bank. And so let's get into it. A lot of people assume the US dollar is dominant because of American GDP or even political influence. But the real reason the dollar sits at the top of the global pyramid is because of market structure, how global trade, finance, and settlement systems actually work. So let's ground that in real numbers. According to the Federal Reserve's international role of the U.S. dollar, this is the 2025 edition that they released this summer. Around half of global trade, all global trade, is invoiced in U.S. dollars, and this is even though the U.S. accounts for only about 10% of global trade. This is a staggering mismatch and a sign of the dollar's deep usage in global commerce. And from the BIS, which is the Bank for International Settlements, this stat basically is extremely profound. The US dollar is involved in nearly 90% of all FX transaction. Really a dominance that has barely changed in decades, by the way. So think about that. Every time most of the world's currencies trade hands, the dollar is right there. So this creates a world where exporters want dollars, importers settle in dollars, banks intermediate in dollars, and corporations hedge in dollars. So the global economy doesn't just touch the dollar, it runs through the dollar. So if trade is dollar heavy, global finance is really dollar saturated. So the BIS reveals that roughly half of all international debt securities are denominated in dollars. Roughly half of all cross-border loans are in dollars. In just under 60% of global FX reserves are held in dollars. This is still far above any other currency and one of the highest shares of any reserve asset. Here's the kicker. About 88% of US dollar denominated international debt is issued outside the United States. So, in about 65% of US dollars cross-border or US dollar cross-border loans involve a non-US borrower and a non-US lender. So, most dollar credit isn't American. It's global. So, global institutions create dollar liabilities far beyond the US banking system. And so that's where the structural shortage begins. The offshore dollar system creates endless dollar demand. So offshore banks and institutions create synthetic dollars all the time through cross-border dollar loans, through dollar-denominated bonds, and through dollar funding markets, and especially through FX swaps. So let's talk about those swaps. The BIS shows that FX swaps now represent over half of the massive $7.5 trillion per day in the FX market. So these swaps generate huge short-term rolling dollar obligations that must be repaid in actual dollars. So this is the heart of the global dollar shortage. Dollar liabilities grow endlessly. Dollar liquidity does not. So the world continually writes promises to deliver dollars without holding dollar deposits and without access to the Federal Reserve's balance sheet. This mismatch is the structural pressure beneath every global cycle. So why is this? Why every crisis becomes a dollar crisis? And the mechanism goes a little something like this. So when global stress hits, offshore borrowers still owe dollars. FX swap funding tightens. Dollar lenders typically withdraw or demand more collateral. And the cost to borrow dollars spikes. So everyone rushes, up the hierarchy towards dollars. And dollar liquidity vanishes globally. So this is why crises in Europe, Japan, the UK, emerging markets, and even local bond markets all become dollar funding crises. So we saw dollar shortages in 2008, 2011, 2015, 16, China, 2018, 2020, global risk off, the 19 repo spike. We saw it in March of 2020, and even 2022, Japan, Europe, FX swap stress. So, and every time, the dollar shortage is what forces the Fed's hand. So why the Fed ends up saving the world. And here's the unavoidable reality of this. Only the Federal Reserve can create dollar reserves. So when global institutions are squeezed by dollar obligations that they can't meet, foreign central banks turn to the Fed. And this is the logic behind why central bank swap lines exist, why the FEMO repo facility exists. 2008's emergency U.S. dollar funding in 2020's global dollar operations, and also the multi-continental support during 2023 or 2022-23, the volatility there. So swap lines are the most important tool of all. They allow foreign central banks to borrow dollars from the Fed, so they can provide dollar liquidity to to their domestic system. This is how the Fed becomes the dealer of last resort, really for the world's dollar system. So, and again, this isn't because the Fed wants global power or control or anything like that, but because the structure of global finance really leaves no alternative. So, why the dollar's dominance persist? And this this ties into some of the fear stuff I tend to try to wrap up with, but people say the dollar is dying. People say the multipolar world is here, and people say that the yuan will take over. But none of these narratives in my opinion, understand the plumbing. And to replace the dollar, a currency must offer deep capital markets. They must offer safe collateral, liquid repo markets, a stable legal framework, depth in global FX swaps, international trust, of course, and also a central bank willing to backstop global liquidity. The euro can't, the won can't, and crypto definitely cannot. So no one else has the collateral, the credit markets, or the institutions. So the global dollar shortage continues, and the dollar remains the world's anchor. So thanks for listening to episode 16 of the Global Ledger. This was a really important one, and touched on some of these narratives about de-dollarization and things like that. But the facts showed you otherwise, because the world always needs more dollars than it has, and why every major global crisis eventually becomes a dollar crisis. So I hope this was helpful. In episode 17, we're gonna break down credit spreads. We're gonna start going into more of a finance side of things, and how markets price risk, and what those spreads really measure in the money and liquidity world. So once again, I'm Justin, and thanks for being here.